welcome to today's super fast and actionable video, which is of course called the bond auction. The 20-year one did it, and that was the time point, the event, the key event that I pointed clients' attention to yesterday, and it did build quite a trap. Originally I thought that the more probable scenario would be to see some kind of an opening weakness giving way to a reversal on the auction, and instead we saw a head fake. Head fake meaning trappy run to the upside. However, my key level 5985 was respected even on this upswing, and reversal lower because frankly the auction did not go all that well when it comes to key bond market characteristics, such as what was the price actually, the bids to cover ratio, and well, it was not ideal. Nothing was in there. And we can clearly see that in these two arrows that I have marked on the 15-minute S&P 500 chart. You can see the run to reopening weakness, which could have very well continued with the market making up its mind thereafter. However, straight off the opening bell, which is the time point that the bottom left arrow is pointing to, there was a flurry of buying activity by retail traders, and they have frankly managed to take the S&P 500 index through the midnight from European perspective levels and till the upper right hand arrow, which was the run up to the auction announcement, which was already marked by refusal to extend gains. We saw a straight flush, rising yields, bonds and equities being dumped alongside, and you can see as well for yourself what the dollar had been doing at this time as well. Nothing to write home about. And we had seen continued selling. The dust was slowly settling down, and there was an opportunity for a dead cat bounce to develop during the Asian and European hours. You can see for yourself how that went when one is trying and positioning oneself for grabbing 1 or 2 dozen of points, because this corresponds to a certain level, I mean the appreciation potential during the dead cat bounce, which did not live up to its potential in the least. That would have corresponded to more than 2 dozen points being available on that upswing. And as you will see from the following chart, which was the premium analysis that I had shared with clients at the very beginning part of yesterday's session, meaning very well before the fated 20-year Treasury auction, I have been looking and pointing already to first low volume, second inability to overcome Monday's highs convincingly in the follow-up aftermarket session on Tuesday, and you can see the consequence with the Wednesday's price action on the daily candle for yourself on the following slide, which I will show you in a minute. I just want to say that my point about a light volume and trappy and technically driven, because I did not expect any macroeconomic drivers to come to the fore this week, and they probably would not, neither today nor tomorrow, and I'm looking for continued rapid trading, and this time with the additional spin that we are seeing yields markedly higher. And you know that I had been covering at very opportune points during the prior months and years the equity risk premium concept, which means that now bonds with higher yields provide for a stiffer competition, meaning they are a stiffer competition to equities being bought. And that's clearly seen way beyond the deterioration in market breadth as seen on this chart, which is the one featuring yesterday's close. You see, and note well, the rising volume. It makes no sense to show you the sectoral perspective, because frankly not even Nasdaq high betas had been a good hiding place, and that's basically just a matter of personal preference that I'm sticking with when it comes to intraday trading, not swing trading. When it comes to intraday trading, just changing gears from Nasdaq long to ES short. That's the way it is if one is willing to play the very nimble game and basically be able to switch positions immediately and not expecting to be in them for more than a couple of hours, because in this environment we have to be willing to take what the market gives us. And you know that I had been pointing to 100 to 101 key level that could have and had the good opportunity to be reclaimed on the upside, and instead we are seeing selling into the dollar strength, which is not what equity bulls want to see. Of course, way more details and how I will handle today's session from the intraday and swing trading perspectives awaits premium clients in today's and tomorrow's writings. So, you know, thank you for liking these videos and subscribing to the channel. You know what I do on my site and about the joint page, helping you decide what's right for you based on what and how you trade. And let's talk soon again.